Almost everyone works to earn a living, provide for their family, and have some money left over for fun. An equally important part of this process is setting aside savings for things like a rainy day emergency fund or for retirement. Unfortunately, unexpected expenses, such as vehicle repairs, home maintenance, or healthcare costs like prescription drugs and dental care, can quickly deplete these savings. Fortunately, various types of extended health insurance are available to help individuals manage these expenses and protect their savings. Types of extended health coverage to protect savings. There are two primary sources of extended health insurance. Individual extended health insurance, which can include travel insurance. Group extended health insurance. Some financial institutions also offer a limited form of extended health coverage to their credit customers, but this is not widespread. Individual extended health insurance. An individual extended health insurance policy is purchased directly from an insurance company representative. The plan is owned and paid for by the applicant, who can also customize the terms to fit their specific needs and terminate the contract at any time. These individual plans can be used in the following ways. To supplement the protection offered by provincial healthcare plans. To enhance coverage for those who are already part of a group plan. For those who are not members of a group plan. Group extended health coverage. The majority of people with extended health insurance, outside of provincial healthcare, get their coverage through a group plan, typically provided by their employer. Group plans usually offer a set package of benefits with some options, such as family coverage. These plans cover multiple individuals who share a common factor, like employment or a professional association. Individual extended health coverage options. Individual extended health coverage options generally mirror those available in group plans. These include medical care, dental care, travel insurance. These coverages can be combined into a single contract, or a policy can be acquired that offers only one or a few of them. A key advantage of an individual plan is the ability to choose the types and levels of coverage, as well as different deductible and coinsurance levels and annual maximums to suit a person's budget and needs. Individual policies, with the exception of travel insurance, are subject to full medical underwriting before they are issued. Medical care. Most Canadian residents have provincial health care, but individual medical insurance can provide protection during waiting periods for new residents. For other residents, an individual policy can fill in the gaps left by provincial plans, such as covering chiropractic services. Individual medical care plans can cover a range of services, including extended health care for hospital or home care services not covered by provincial plans, prescription drugs, accidental death and dismemberment, AD&D, dental care, vision care, emergency travel medical services, deductibles and coinsurance. Insurance companies manage their claim exposure through deductibles and coinsurance. These provisions require the insured to pay a portion of their medical expenses. Deductible. This is a fixed dollar amount that the insured must pay entirely before the plan begins to cover any expenses. Deductibles are applied annually and reset each year. For example, if a plan has a $100 annual dental deductible, the insured must pay the first $100 of dental expenses themselves before the plan provides reimbursement. Coinsurance. This indicates the percentage of a qualifying expense that the plan will cover, with the remaining percentage being the responsibility of the insured. For instance, a plan with an 80% coinsurance factor for dental claims will pay 80% of the claim, and the insured pays the remaining 20%. Both deductibles and coinsurance help to lower premiums by shifting some of the financial burden to the insured and discouraging unnecessary claims. While coinsurance is common in both individual and group policies, deductibles are much less frequent in individual contracts. Dental care. Since most provincial health care plans don't cover dental services and appliances, dental care is a key component of many extended health insurance plans. Benefits typically fall into two categories. Routine maintenance. This includes regular checkups, cleanings, x-rays, fillings, and extractions. These services are usually covered up to an annual maximum, e.g., $1,000, and are subject to a basic coinsurance factor, with the insured typically paying 20% to 25%. Major restorative services. These include procedures like crowns and inlays and are often subject to a higher coinsurance factor, usually 50%. Coverage amounts are based on a fee schedule set by provincial dental associations, and any fees exceeding this schedule are not covered. For extensive dental work, e.g., $500 or more, most insurers require a pre-submitted estimate to determine coverage in advance. Deductibles and coinsurance are most common in dental coverage and are used to manage premiums. Travel insurance. Travel insurance is an umbrella term for various coverages for people traveling outside their home province. Plans can include protection for emergency medical expenses, lost or damaged luggage, trip cancellation, the return of an ill, injured, or deceased traveler to their home. Due to provincial health benefits differing across Canada and higher hospitalization costs abroad, travel insurance is critical to protect against catastrophic medical expenses. Travel insurance can be purchased from various sources, including insurers, travel agents, financial institutions, and airlines. However, coverage from a credit card is often more limited than a policy purchased directly from an insurer. For many providers, medical underwriting is done retroactively at the time of a claim, not when the policy is issued. Pre-existing conditions. A frequent reason for claim denial is that the expense was the result of a pre-existing condition. This is a condition for which the insured sought treatment, had tests, or had a prescription changed within a specific period, e.g., 90 to 180 days, before their trip. Chronic condition, like diabetes, may also result in restricted coverage if the person has not been symptom-free for up to a year before the trip. The existence of a pre-existing condition doesn't void all coverage, but a claim will be denied if it is specifically related to that condition. For example, if a traveler with epilepsy has a seizure, their medical expenses would not be covered, but expenses from an unrelated car accident would be. Premiums. The cost of travel insurance premiums is mainly impacted by the amount of coverage and the length of the trip. Longer trips result in higher premiums, but the increase is not always proportional due to a basic processing fee for every policy. The destination also affects the premium, with travel to high-cost or high-risk areas like the United States, the Middle East, and Latin America costing more than travel within Canada. Finally, age and medical history are significant factors, as older individuals, especially those over 65, are more prone to illness and injury, and thus pay much higher premiums. Group extended health coverage. Group extended health insurance is designed to cover a wide range of medical services and products not fully covered by provincial health plans. It provides coverage to group members and their families without requiring medical underwriting for basic benefits. These benefits are typically subject to deductibles and coinsurance clauses. Types of coverage. Common types of coverage in group plans include prescription drugs, enhanced medical and hospital care, dental care, vision care, accidental death and dismemberment, AD&D. Prescription drugs. Every group plan with health care benefits includes a prescription drug plan. These plans cover only prescription drugs, not over-the-counter medications. Prescription drugs are further divided into brand name and generic versions. Generic drugs are typically much cheaper since their manufacturers don't have to bear the high costs of research and development. Insurers have a formulary which is a list of covered drugs, including the types, brand or generic, and the price they will pay. If a plan member chooses a brand name drug when a generic is available, they will usually only be reimbursed for the cost of the generic and must pay the difference. Enhanced medical and hospital care. This benefit is designed to supplement provincial health plans by covering services like chiropractors, massage therapists, naturopaths, and optometrists. It may also cover ambulance transportation and medical equipment such as crutches and wheelchairs, up to an annual limit. Hospitalization coverage often provides an upgrade to semi-private or private rooms for a maximum number of days. Dental care. Dental care is often the most significant and costly component of group insurance plans because provincial health care generally does not cover dental expenses, except for emergency situations. These high costs are magnified because dental care costs are high. Coverage often extends to the plan member's entire family. Access to care is discretionary and does not require a doctor's referral. Premiums for the member's personal coverage are often paid by the employer. To control these costs, plans use deductibles, coinsurance, and annual or lifetime maximums. Coverage typically includes cleanings, checkups, fillings, and restorative work. Orthodontic work may be covered but is subject to maximum limits and often requires a predetermination of coverage. Cosmetic dental work is usually excluded. Vision care. Vision care is a standard feature of most group plans, providing reimbursement for expenses such as prescription eyeglasses, contact lenses, and optometrist fees not covered by provincial plans. Benefits for eyeglasses and contact lenses are typically limited to a maximum amount, e.g. $100 to $350, every 24 months for a new prescription. Accidental death and dismemberment, AD&D. AD&D coverage is common in both group and individual plans. It pays a benefit if a plan member dies or loses a limb, hearing, or eyesight due to an accident. In the event of accidental death, a fixed principal sum is paid to the beneficiary. For the loss of a limb or sense, a percentage of the principal sum is paid, with the amount depending on the severity of the loss, e.g., losing 2 limbs pays more than 1. The death or loss must occur within 1 year of the accident and be a direct result of it to qualify for benefits. Deductibles and coinsurance. Most group plans require copayment from members to control costs and premiums. Annual deductibles. Once the annual deductible is met, additional expenses qualify for payment or reimbursement. For example, if a plan has a $100 deductible and a member files an $80 dental claim, they are not reimbursed, but their deductible for the year is reduced by $80. Coinsurance factors. This applies to every claim after the deductible has been met. For example, if a plan has an 80% coinsurance factor and a $100 deductible, a member with an $800 claim would pay the first $100, the deductible, and then the plan would cover 80% of the remaining $700, which is $560. Some group plans that cover families have both an individual deductible and a larger family deductible. Claims from any family member reduce both their individual deductible and the family deductible. Once the family deductible is met, no individual deductibles apply for any family member for the rest of the year. Payment of benefits. Group plans typically provide benefits on either a reimbursement or direct billing basis. Reimbursement. The plan member pays for the service or product upfront, and then submits a claim with receipts to the plan administrator for reimbursement. Direct billing. The plan member uses a membership card, and the provider, e.g., pharmacist or dentist, bills the group plan directly. The member only pays for costs not covered by the plan, such as the difference between a brand name and generic drug. Comparing individual and group policies. Here's a breakdown of the key differences between individual and group extended health insurance policies, presented in a more natural, flowing way. When you're the policyholder of an individual policy, you're the one applying for and owning the plan. This gives you full control over the coverage you select, and you can customize the policy to your specific needs. A major benefit is that the coverage is fully portable. This means you can keep it even if you change jobs or leave a group. When you apply for an individual policy, the insurer will perform full medical underwriting to assess your risk. Because of this, premiums are based on your personal characteristics and are generally higher compared to group policies. Pre-existing conditions are typically excluded from coverage at the time the policy is issued. Individual plans can be very flexible with a variety of benefits available. Deductibles are not usually a feature of these plans, but a coinsurance factor is often applied. For tax purposes, premiums may qualify for a medical expense tax credit, and any benefits you receive are tax-free. With a group policy, the plan's policyholder is a sponsor, like an employer. As a plan member, you have some control over your selected coverage, but you don't own the master contract itself. The biggest downside is that the coverage terminates if you leave the group. For basic coverage, there's typically no medical underwriting required when you join. Premiums are based on the overall characteristics and claims history of the entire group, which means the costs are generally lower than for individual policies. Because there is no medical underwriting, pre-existing conditions are covered by the plan. While the benefits are extensive, they are subject to the limitations of the master contract. A key difference is that most group plans use a deductible, particularly for dental care, and a coinsurance factor is also usually applied. Premiums for employer-sponsored plans are a deductible expense for the employer and are not considered a taxable benefit for you, with the exception of Quebec. As with individual plans, the benefits you receive are tax-free.